I guess I'm moderating right now. I didn't know that, but where's Nico? Nico's in. Yeah, I guess I'm the moderator. But my name's Sam Callahan. I'm the senior analyst at Swan. Why don't you guys just introduce yourself real quick, just so everyone's not familiar.
Hello, I'm Hong, co-founder and CTO at Bitwise, one of the ETF issuers lately.
I'm Eric Weiss. I run Bitcoin Investment Group and Orange Pilled Michael Saylor.
Yeah, my name is Max. I run debify.com, which is a lending platform for institutions.
Hi, my name is Nico Moran. I'm founder and host of Simply Bitcoin, the most popular daily Bitcoin live show on YouTube, Rumble, and X.
Okay. Well, the title of the talk is Will Institutional Adoption Leave the Plebs Satless? I think that's the title. What do you guys think? Do you guys think that this is a bad thing for the everyday Bitcoin investor to see institutions getting involved and getting interested in Bitcoin? Let's throw it to Hong, because you guys had a great start to your ETF. Congratulations, by the way. That's a successful launch. But let's throw it to you and just go around the horn.
Yeah. I think there will always be people that self-custody their Bitcoin, and that is the kind of this journey that they start, and that's really important for the sovereignty of the network and sovereignty of the people, etc. Things like Bitcoin ETFs, I think, are trying to bridge and create economic bandwidth to people that are likely not going to make the leap in the short term, and trying to kind of bring that journey a little bit forward, so that then once they kind of dip their toes in, they can further make that leap. And so that's how I think about the kind of current bridge that we're building, rather than it being a replacement for buying and holding your sats by yourself. Yeah.
I think institutional adoption is absolutely essential and benefits the plebs more than anything. With institutional adoption, the corporations and the folks like Fidelity and BlackRock and your firm, what you get is political clout, regulatory clout, you get protection. If you keep Bitcoin as something for the plebs, among the plebs, by the plebs, number one, you never get that much appreciation in the value. Number two, you run the risk of having it, okay, fine, you can't take it away per se, right? Because of the nature of Bitcoin, but you can, to some degree. $1 trillion asset can be severely impaired by the likes of the United States and China, but because of the institutional adoption, we have regulatory on our side, we have political on our side, and there's still tons of appreciation for the plebs. We'll always be able to buy, sats at some price. And, from where we are now, it's 10x to even equal gold. So, if 10x is a good enough return for you on your investment in the foreseeable future, then I think we're in pretty good shape.
Also, I don't think plebs will be satless, because I will agree that most of plebs are buying Bitcoin. They're not buying Bitcoin ETF. Bitcoin ETF is just a tool for financial institutions to get a taste of Bitcoin. So most of the people, if we talk about plebs, they're buying Bitcoins. They do self-custody or they leave it on exchange, whatever. But these are two different types of things. Institutional adoption is happening through more common financial products for institutions. Some of them are actually buying Bitcoin, but not that much. And plebs are buying just pure Bitcoin. So I don't think they will be left without the opportunity to buy.
Yeah, I mean, look, plebs had a very long time to stack. American HODL made the meme, 6.15, right? A very, very long time. Of course, all of that changed, which it's crazy. There's a coincidence, right? January 10th, which is the same day that, many, many years ago, Hal Finney, wrote that very famous tweet, running Bitcoin. That was the day that the spot Bitcoin ETF changed. And of course, this institutional wave is coming, but there's a very famous saying in Bitcoin is the money of enemies. You have to be okay with everyone using Bitcoin. And the reality is that the lion's share of the world's wealth is held by the boomer generation. And the boomer generation is very comfortable with certain types of platforms. And you know what? Just some people are just not going to be comfortable with self-custody. Some people want the convenience of their Charles Schwab account being able to get exposure to Bitcoin, or dealing with their wealth manager doing that, So look, if you're a pleb, time is running out for you to acquire just one Bitcoin. You could do it if you really put your mind to it. But at the same time, we've all been telling you for a very, very, very long time. So anyways, Sam, you cover this. I consider you one of the macro experts in the space. So I'm curious to hear what your thoughts are on it. I know you're moderating, but I still want
I didn't know I was going to moderate, but I think you hit the nail on the head. I think Bitcoin punishes intellectual laziness and nihilism, which is a good thing. Like you said, plebs had an ability to buy Bitcoin if they were just curious. The last 5 years at least, it's been extremely easy to do that. And so just because institutions coming on and the price is higher, I think they suffer from unit bias, but they can still stack sats. They're still going to benefit from the price appreciation that comes from institutional adoption, and it's going to raise everyone up. I don't see how it's a bad thing at all, as long as the optionality exists for people to take self-custody still and use Bitcoin in a way that's sovereign when meant to be used. I don't see how it's bad at all. It's also completely inevitable. What were Bitcoiners going to do? Stand outside the SEC and protest an ETF getting approved? How this isn't how they thought it was going to be adopted. Everyone is going to benefit from Bitcoin. The banks are going to. It's what Michael Saylor's talk was about. It's the banks benefit from it. All institutions benefit from it. All the enemies. Everyone you don't like is going to use money at the best money. And so just be prepared for institutions that you don't like that are going to really benefit from Bitcoin. And what I get interested in is how an institutional wave is actually going to progress, because do you guys expect institutions to start getting involved, like the MicroStrategy just announced of being a Bitcoin development company? Are they going to start to maybe get involved with mining, get involved with Lightning? How do you guys see the institutional wave kind of growing over time? I'd love to get your thoughts on them. Go, Rev.
Yeah, absolutely. I think an interesting thing to discuss is kind of the second order effects that people might not be paying as much attention to of something like the Bitcoin ETFs being having the moment that it has. For example, for the kind of further institutional adoption that you're talking about, there are a lot of weird roadblocks in the United States for financial institutions to engage. For example, broker-dealers that are regulated by FINRA, they're regulated by SEC, currently cannot custody or touch Bitcoin at all.
Yeah.
It's just not, there's a bright line and an arbitrary line that is drawn where Bitcoin custody is not allowed by broker-dealers. So Fidelity, for the longest time, had the ability to custody Bitcoin, have you trade Bitcoin, but in the Fidelity Brokers app, there isn't a buy-sell Bitcoin button. Why? It's not because they're not capable of it. It's not because the company does not have, it's nothing about the leadership or anything. It really is just that the SEC has an arbitrary line about broker-dealers not being able to touch it. There's another thing called SAB 121, which is an accounting rule, where if you, as a U.S. financial institution, take custody or the deposits of something like Bitcoin, or specifically, that is what it's targeted, is that then you need to have one-to-one reserves, treasuries, that match that. You need to have $100 million worth of Bitcoin deposited by customers, then you need to have $100 million worth of treasuries. And if that 10x's, then you need to figure out how to get $1 billion of treasuries in your balance sheet. So it makes it economically not viable. So there's these weird roadblocks that have been set up to basically not allow any type of further experimentation or adoption by institutions. And that those existed because the regulators wanted to keep the kind of the mass, the plebs in some ways away from touching Bitcoin in a very easy way. They wanted a lot of hoops. You have to move your money out of brokerage accounts. You have to go somewhere offshore and kind of make it high friction enough so that the kind of retail would stay away. And now the Bitcoin ETFs have landed, and at this point, the floodgates are open. I think all of those weird things are being examined and pushed back by, for example, SAB 121 and the custody rule is being lobbied against by the U.S. banking lobbying group, not Bitcoin advocates. The banks are advocating for their ability to have Bitcoin revenue. And I think that's the type of thing that is really happening in this very moment. And in the next 6 to 12 months, will really iron out a lot of these weird roadblocks that will allow these institutions to actually start doing things.
Yeah, MicroStrategy is a great little microcosm of this, right? It's very difficult for corporations to hold Bitcoin due to the accounting laws, which force them to mark it down when it goes down, and they can't mark it back up when it goes up, and they have to show they have an operating loss, right? So it was really punitive. And MicroStrategy petitioned FASB, the Financial Accounting Board, and they got it changed, right? So that now it will be fair market value accounting. And so it's corporations that drive that change. And while the boomers have a lot of money, it's really corporations that have the money, governments that have the money, all these agencies that have the money. And that's what's going to, drive the price in fiat terms up, which benefits all the plebs that stack sats. And if you put the ego aside and this unit bias aside of saying, measuring your life in number of Bitcoins and start thinking about it in sats, if you put $1,000, convert $1,000 into Bitcoin, do you really care how many Bitcoin that equates to if it goes up 100x, right? It's still $100,000 worth of Bitcoin. So I think that it's pure benefit to the plebs, this institutional adoption. It's actually necessary. It's corporations that are going to deliver the cool apps that are going to make Bitcoin more usable in lots of different ways. It's everybody building on Lightning and different layer twos, and that's going to come from institutional adoption. It's not only necessary, it's what we want. And I get that there's kind of this pleb feeling that it's been ours for a while and we found it first, and we kind of like some of that camaraderie and smallness of it. And now our thing is kind of growing up, and it feels like it's being taken away from us, but that's the beauty of Bitcoin. It can never be taken away from us.
Well said.
Yeah, we are very bullish in our company on lending, and specifically on Bitcoin as a super collateral. So we believe that the next step will be logical, that banks are going to start lending money against using Bitcoin as a super collateral, because in that case, they don't need to hold Bitcoin, but they can still use willingness or non-willingness of Bitcoiners not selling Bitcoin and paying a high premium for that. So we believe that the next step for institutional adoption will be Bitcoin borrowing and lending. Just provide them with the proper tools, non-custodial setups, multi-sigs, where they can directly communicate with borrowers and Bitcoiners across the globe and start giving money using Bitcoin as a collateral, because Bitcoin is a highly liquid asset, and that's the important thing. You can basically liquidate anyone 24/7, any day, because markets are working. You can do whatever. It's purely programmable. You can do it in a non-custodial setup, which is important for plebs. So I think that the next wave is definitely lending and connecting Bitcoiners with traditional financial institutions. And also lending, that's the business that banks understand. The modern banking in Italy in 14th century was created specifically to lend buyers who were traveling across the globe, to lend them money. That's the essence of every banker. They do understand the lending business, and I think that's the next step.
100%. And, from a lot of the, Bitcoin Twitter community, their biggest thing is, oh my God, this is BlackRock. This is an evil institution, so to speak. Look, I think fiat brings the worst out in people. And Max Kaiser has a very famous saying, which is, you don't change Bitcoin, Bitcoin changes you. And not too long ago, you see Larry Fink on legacy financial media literally saying all the Bitcoin talking points. I think what you're witnessing is Bitcoin's incentives doing what Bitcoin incentives do best, right? And it's convincing. It's like, oh my God, where else am I going to get this type of return? I mean, when Michael Saylor did the earnings, earnings call, a couple months ago, I never forget, he had the performance of MicroStrategy, him, to the left. And one of his, one of the people producing the show tried to take the earnings screen down to make Michael full screen. And he was like, no, leave that up. And essentially what he was trying to show, a soft flex, was that, look, this Bitcoin strategy is going to outperform everything else. I don't think that it's a coincidence that the CEO of Vanguard stepped down. Okay. So, Bitcoin is a black hole. It's going to suck everything in. And, and the awesome part about Bitcoin is that it's a level playing field. Michael Saylor had to pay a price of tuition just like everyone else. He didn't get any fiat elite privileges. He had to buy Bitcoin at the price he paid. and he had to pay the price of tuition, like we all have done in the past. Now, Sam, I want to pass it on to you because this is one of the things that we've heard. One of the I guess the worries from the community, which is this idea of rehypothecation. So I talked to Foss and I talked to Lavish, and they're on the fence of that's not a worry. But then you talk to Larry Lepard and Caitlin Long, and they say, yeah, rehypothecation is an issue. So I want to get your take on that, Sam.
In terms of the ETFs, or just to find out, yeah, I'm not that worried about it either. I just don't think that's how ETFs work. I don't think they're even allowed to legally. I mean, they would have to basically be running a fraudulent operation to do that. You could say there's been a lot of shenanigans with the gold ETF over the years with JP Morgan, and they were doing criminal activity when they were working on the gold trading desks, and they were found they were suppressing it. They were spoofing the prices. But at the same time, Bitcoin is a little bit different because Bitcoin it's digital, it's portable, it's easy to take self-custody than gold. It's more volatile, so it's harder to manipulate the price if you were going to do any illegal activities like that. I mean, you could try to suppress it and short it, but it's more likely to get blown out of those short positions given Bitcoin's volatility and its price compared to something like gold. So I'm not that worried about it at all. Like I said, it'd basically be a tinfoil hat kind of conspiracy that one of these issuers would be working illegally and performing a fraudulent operation if they were rehypothecating any of the ETF holdings. So,
do you think that and I know some ETFs have done this? For example, I think the Van Eck made their address public, which was kind of a bad idea because everyone kept sending them the dust and stuff.
That's actually
Bitwise. Okay,
yeah,
thank you for correcting me. So. And I know that ARK also announced that they were going to kind of, show that they actually had the Bitcoin. Do you think it's a responsibility of those ETFs to do that, to avoid what happened with gold?
I think there's security concerns. But I mean, honestly, Hong would be better suited to answer the question, being the CTO. But I think it does set a standard of transparency that should be supported. I think for them, they would have to think about security issues, I'd imagine. But I mean, Hong, you did it. So can you talk about the thought process, why Bitwise decided to do that, and what were the reasons behind it?
Bitcoin is designed such that you can have your addresses public, and that the public keys, the public address does not expose anything about the private keys. So a publicly shared addresses Bitcoin holdings is exactly as safe cryptographically as one in which you never shared a public address. That's by design. Of course, if it's you and me, we shouldn't be sharing our Bitcoin address, because if we hold a lot, then somebody can come to us with the rents and they could, they could, there could be extortion, that type of thing. So you and I shouldn't be sharing our Bitcoin address, but an institution or custodian like Coinbase Custody that risk shouldn't be a factor anyways. They are already a honeypot, and if they can't survive someone coming to their door with a wrench, then they don't deserve to exist as a custodian. So because cryptographically it is perfectly secure, and for an institutional custodian, their business model and operations assumes that they can deal with physical threats and attacks and all those types of things and geopolitical situations, etc. There really is not any added risk, and it is mostly just an operational compliance. Like, everyone has to get comfortable with the situation. But the kind of claim that, because you shared your addresses, because you're transparent to the public investor about your holdings, you're actually putting the Bitcoin at risk, is, I think, more of a FUD-like talking point than in reality. And I do think it is really important. I mean, ultimately, I don't think anyone ultimately the SEC regulates this product. KPMG audits our funds on an annual basis. I don't think anyone is really thinking that Bitwise will be doing something funny with our Bitcoin. But I do think, as Bitcoin ETF issuers, we have a responsibility to demonstrate the unique properties that are available by the blockchain. So blockchain built in has this public auditability feature that is available, that is not available for something like gold. So to your question, even about even if you had concerns about gold, etc., Bitcoin ETFs have an ability to be much more publicly auditable and transparent. And it is not only just something that it is a responsibility, but I think it really demonstrates even to regulators and to everyone in the world that we have a different asset here. This is not just gold. And that's really kind of was one of the motivating factors of why we decided to do it, is to kind of, it's almost in some ways showcasing an education moment for what makes this unique.
I think it's great that you guys, I think it's great that you guys did that. On a daily basis, my clients are family offices and high net worth individuals. And my Bitcoin fund, we custody at Fidelity Digital Assets. And I can tell you from, their perspective, and granted, we have the benefit of, I'll use air quotes for first world country in the U.S. We'll see how long that lasts. But, Fidelity and BlackRock are the two largest asset managers in the world. They're not interested in stealing people's money who invested in the ETF. Their investors are pension funds, endowment funds. They have, literally trillions of dollars across multiple different assets. So I think this fear factor that they're going to steal our Bitcoin is way, way overblown. None of my clients are even remotely concerned with the counterparty risk of a Fidelity or BlackRock. And I think it was brilliant for you guys to provide that transparency. And I hope that those guys, follow your lead. It'd be great. You can't do that with other assets. It's unique that we can do that. It would be nice if they did it. That said, I think it's, a lot of FUD about nothing. And, a lot of this panel really relates to, somewhat coincidentally, Saylor's entire presentation here, his keynote, on the first day, which essentially went through every single institutional entity and what they bring to Bitcoin. And it's all positive at the end of the day. Even if you think it's negative, they're bringing so much positive. This is so good for all of us that are interested in the space. And yeah, just like individuals, there'll be good actors and bad actors. But at the end of the day, this is what we need for Bitcoin to achieve the potential that we all wanted to achieve.
Well said. You have anything to add?
I don't know what to add. It's basically, I agree with that. And the only thing I would add that it's the beauty of Bitcoin. You can be very transparent, but then on the other side, if you want a privacy, you can achieve that with Bitcoin as well.
I'm going to take devil's advocate just for the sake of spicing up the conversation. In the U.S., of course, the infamous 6102 order that was baked, and, a lot of Bitcoiners, part of Bitcoin mythology and all that stuff. Does it concern you that the majority of, except for Fidelity's taking self-custody, or taking custody themselves, but does it concern you that Coinbase, is being used as the custodian for the majority of these ETFs?
I think that will likely diversify in the pretty near future. In some ways, the reason everyone kind of landed on the same answer was because we were all in quite a rush to be on the first day and launching with everyone else. And ultimately, in that leading up to that, you didn't want to have another conversation with the SEC, get another question about why are you using this custodian that we never heard about, and what is their regulatory status and what is their setup. Ultimately, Coinbase is the custodian that the SEC is most familiar with because they're also a public company as well. So I think for that type of reason, a lot of ETF issuers kind of converge on the same answer. But ultimately, over time, the market will mature and there will be more players and more competition, and I think that will get to a better place. But to your point about are ETFs safe of the government seizing everyone's Bitcoin? No. If that is the risk that you're worried about, you should definitely not invest in the ETF vehicles, and you should do self-custody. And that's why I think self-custody is always so important if we want Bitcoin to remain as an asset that still has the ability to fight back against kind of that type of overreach. I don't think, to some extent, I think it is a little bit overblown to worry about the same thing happening with Bitcoin today that happened to gold. And at that time, we didn't have things like Nostr. We didn't have ways in which the public can communicate to each other at scale in a censorship resistant way. So I think that type of government overreach was also more possible back then. But anyways, we should still worry about that. And so it really is important that we maintain self-custody and we maintain kind of sovereignty in that degree. But yeah. So I generally agree with you. I just wanted to add some more notes there.
I mean, just to piggyback off what you just said. Also, back then, gold was kind of critical to the global financial system when they seized it. And this is Bitcoin. Like Bitcoin's outside the system, and it's just property. So it would be seizing the property of tens of millions of Americans today. I mean, I think that risk is also overblown. And it's just the risk you take when you choose to invest in an ETF over spot Bitcoin. I mean, it's convenient, and you pay for that convenience with different trade-offs, like the counterparty risk that you take on. So, I mean, people need to make that decision for themselves. Just because the ETFs exist doesn't change the underlying technology. It's still a decentralized monetary protocol that people can use peer-to-peer. But if the ability to take self-custody is preserved, then I think it's just all positive, just like what Michael Saylor said in this talk.
Yeah, I mean, Bitcoin's all about freedom, right? And along with that freedom comes the freedom of the individual to participate in Bitcoin the way they want. If for some folks, it's, having an ETF and getting the fiat appreciation is the way they want to play it, that's great. Some people want to put 1% of their net worth in it, great. Some people want to put 100% in, great. Some people want to take self-custody. It takes all kinds. And, that's the beauty of Bitcoin.
Amen. Well, we're out of time, actually, guys. So thanks for joining. Thanks for listening. Nico, anything else?
Yeah, last word. Guys, if you sell your Bitcoin right now, you are selling it to BlackRock. So don't do that.
Thanks.